Hey, welcome back to another segment of my YouTube channel, which is the most anticipated segment of my YouTube channel known as the Forex Weekly Insight. It is a privilege, one I'm not taking for granted, to be sat here with you guys to be analyzing the market, and we're reviewing the trades we took weeks ago and also identifying trade opportunity for the upcoming week. If you don't know my name is Bestman Dipiri. I am proud to be one of the most realistic forex trader here on YouTube. We analyze the market before the market play out, thereby taking you guys into the mindset of a profitable forex trader. You can actually see this is a live account right here. I'll trade my live account as well as my investors account. Yeah, so best believe when I call shit out here, I'm equally taking the trade. If I make profit, you make profit. If I take in loss, you take in loss. But best believe our losses are very few compared to our winning trades. Why? Because we do a top-down analysis. And today's segment of the YouTube channel won't be any different from the previous one, which is me coming here, analyzing the market with no indicators, no moving averages, no hypothetical stuff. Just analyze the market and we identifying tradable opportunity and how we can actually jump in and put in money in our pocket. Sorry, you'll be seeing fancy stuff on my screen. You'll be seeing fancy stuff. Neither will you be seeing my face, at least for now. Not to get you distracted, just go with the flow, and you might actually, not you might actually, you will learn something from the channel, because best believe I've been doing this for quite a long time now. I've been training for over 10 years, and I've gotten to the point where I don't want traders to be distracted. Just learn, use the skills you've learned, and so you can actually trade on your own. You see how the things have been done, and you can replicate it on your own chart. All right, I don't want to talk too much. Once again, my name is Bestman Dipiri, and very shortly we will be reviewing and we'll also be taking trades for this week. All right, so in front of, let's start with AUDUSD. AUDUSD has breached its bearish trend line, and we are currently having issues sustaining this bull run to the upside. I think that again, AUDUSD has breached, it has broken above this bearish trend line. This bearish trend has been holding it down for a long. It has broken above it. Not only has it broken above it, assuming properly, they have also come out to take out this resistance level, and the market is having issues sustaining this move, whether it wants to go up, whether it wants to go down. It is having issues with that. Now, for me, whenever I see price breach an area like this, and immediately I see a bearish engulfing candle close, two things comes to my mind. The first one that comes to my mind is this could be profit taken by investors, and a reversal to the downside should occur. I think that again, whenever I see price breach an area like this, two things come to my mind. Once I see a bullish engulfing candle break off a level, immediately we have a bearish engulfing candle. This bearish engulfing candle close here could mean investors close position as profits. Hence, the market will continue going back to the upside. Or it means this is a fake out, a reversal to the downside should occur. So what's going on for AUDUSD? Is this a fake out? Is this profit taking? I don't know. The market has to decide. But what I do know is once price breach above a level, I see a bearish engulfing candle close, I will just come and put a level around there and say to myself, if indeed the market wants to keep pushing all the way to the upside, it has to come back and break above the previous candle. And what happened is last month candle, being a very strong bullish engulfing candle, failed. Let me zoom it properly so you get to see this. Failed to close significantly higher than the previous candle, and this month candle, being 24th of May, is looking bearish, pointing down. So what this means is we might actually experience a rollover to the downside. Now on the weekly time frame, you can actually see the market is kind of building a case as to why it wants to reverse all the way to the downside. This is looking like a potential left shoulder. This is looking like a head. Maybe a right shoulder wants to occur somewhere around there. If that should happen, this will be the neckline of the head and shoulder pattern. You have to understand, head and shoulder pattern are bearish reversal sharp pattern. They can reverse a trend from being bullish to being bearish. I think that again, this is looking like a left shoulder head, a potential right shoulder. A potential right shoulder might actually occur around there. If that should happen, we will expect a reversal to the downside. Now, just see how as I put that level on the monthly time frame around there. This helps me, not to enter a trade prematurely, because this, for lower time frame traders, let's go to the daily time frame so you get to understand something. Okay, cool. For lower time frame trader, this was the level price was having issues breaching. This is a breakout. For lower time frame trader, this is a breakout. Okay, this was the level. This was the previous candles. Okay, let's take it back again so you understand. This level marked here. This is the level I marked out, waiting for a significant break of this level, right? Waiting for a significant break of this level. On the 4 hours time frame, all lower time frame traders can see is we've broken above this level, especially if they are just, let me zoom up properly. One of the goal of this channel is to help traders identify their mistakes too, so they know how to trade properly. Lower time frame traders would have seen this as a breakout, a retest. I think that again. Lower time frame traders, the 4 hours time frame trader, the intraday traders and scalpers would have seen this as a breakout, a retest. When price comes in here, trust me, they would have been in this trade already. The stop loss would have been somewhere around there, and they would have bought somewhere around there because this is support. Price has broken above it, came back, retested it. They probably would have jumped in for a buy around there. What happened? They would have been in profit all the way down here. Probably would have pulled back down to threaten their stop loss, and they'll start praying, God, please, please, it's coming down, oh God, please. And what happened is start pushing all the way to the upside. Okay, finally it's going up, what happened? Stop loss became their case. But from where we are coming from, this is just noise. This is noise. Where we are coming from, this is noise. This high is not significantly higher than this. This high is not healthier than this. This is price having issues breaching above its previous high. This is why it is very important to do your analysis from the monthly time frame and the higher time frame. Basically, it helps give you a better overview of the market. For what I can see is for several weeks, price has been having issues breaching above this area. We are struggling around this area, and if I'm to be serious, this is looking like a fake out. We faked out, we couldn't sustain, we break back below this area. We're currently trading back below this area. So let's help the intraday traders identify trading opportunity. Let's zoom up properly. So this is the previous high. This is a fake out. So price has, let me adjust this properly to accommodate for all of the levels. Cool. All right, so this was the previous high. This way you can see the several struggles around this area. You can see the fake out. So whenever I see price breach above an area, couldn't sustain, comes back, break below that area, and come and retest underneath that area. So price breaks above an area, couldn't sustain, break below the area, and is currently retesting that area underneath it. It just tells me start looking for selling position to the downside. Now on the 4 hours time frame, you can actually see this properly. This was the fake out, a break below the area, a retest of it, and we are currently pointing down. Now, for all you intraday traders, I love you guys, and I always give you guys straight up opportunity so you don't blow your account, because most of you can actually sit on your hands when the market is indecisive, or you can't sit on your hands for a lengthy period, giving the market time to make a decision of where it wants to head, on where it wants to head to. That's why I'm here to help you, to guide you, to lead you like a proud father. So if you're an intraday trader and you want to start looking for selling position, I think wait for price to break below this trail line, because this is a fake out. Trust me, I've been doing this for 10 years. I've seen this kind of formation happen several times over the years, and trust me, it has never failed me. A fake out, a break below, price come on and that here to do a retest, a break of a counter trend line, it will start going all over to the downside. So what are we doing here is this counter trend line needs to be taken out. Once you see a bearish engulfing candle break below this area, you can start selling, especially if price comes here and take out this black bar. This black bar, you don't want to mess with it. This guy is here. You can see we had interactions here before. We had struggle breaking below this area before we started pushing all the way to the upside. So rules of engagement will be: wait for a bearish engulfing candle break below this area. Once you see a bearish engulfing candle break below this area in confluence with this minor level, this is not the major level, this is the minor level from the intraday time frame. Once price take out this level, you can start looking for selling position all the way to the downside right here. Your stop loss comes somewhere above this high. You can start selling all the way to the downside. Now, before you start getting a side tail, we have an evil spirit that might actually cause an offset as to why price shouldn't get all the way down here. And this trail line is here. This descending trend line is here, and it's possible we can come in, bounce and start pushing all the way to the upside. So what will be the rules of engagement? If price take out here and we start coming down, one price comes in here, close in significant amount of your profits. Not close out your trade entirely, no, close in significant amount of your profit. Push your stop loss past break even. In anticipation, price will just keep going down and gets to your overall target, which is here. I think that again. If price takes out this area and will start coming down, once price comes in, close out your first position entirely as profits. On your second position, push your stop loss past break even. In anticipation, you will get to your overall target. Your floating position will get to your overall target, which is here. Now, why are you doing so? So you don't give back what you've made to the market. The worst thing you can actually do as a trader or experience as a trader is to be in profit, only for the market to come into an area of concern like this trend line right here. Because you can't see it, or because you didn't zoom out to see it, you might start having difficulty. Price will come here and start reversing, and all your profit turns to negative, and the worst trailing price is even now coming to threaten your stop loss. So when price comes in here, you might as well want to lock in some significant amount of profit, push stop loss past break even. Anticipation will just start rolling all the way to the downside. Now, why am I saying wait for price to break below this area? It is possible we can break this trend line and come and play around here a little bit before actually going down. You don't want to enter this trade prematurely. Okay, so wait for the breakout of this area, because this is looking like a potential left shoulder head. Maybe price will actually consolidate around this area before forming a right shoulder before actually breaking all the way to the downside. So that to be on the more safer side, wait for the break below this area. You can start selling all the way to the downside. When price comes in here, please lock in significant amount of your profit, push your stop loss past break even. In anticipation, we just roll over to the downside, which is somewhere around here. Now let's look at this market from a big picture perspective. For me, when I do my analysis, I always look at for areas or look at reasons as to why my analysis would not actually play out. Then in my journal, I write down my contingency plan. In the scenario the market wants to act left, not right, the market wants to act left, I'm already aware and I've written out my contingency plan, so I'm not taken by surprise. Now, if I'm looking at this, to be very honest, I'm looking at this very properly. This is looking like a healthy breakout. We've broken above a level, we've come back to retest this level, and this is a massive bullish engulfing candle. This massive bullish engulfing candle engulfed 2 months of trading. It's this candle engulf this candle and this candle. So this just tells you we have a strong bullish pressure coming up from this area. It is possible we can actually break out to the upside. I'm not gonna lie, it's very much possible, right? Possible we can actually break out to the upside. But the good thing is, as traders, we are reactors. We don't dictate for the market, we follow the market. If the market wants to break to the upside, all fine and good, I'll be looking for buying position to the upside. Simple as that. If the market wants to reverse and keep going back down, all fine and good, we'll be looking for selling position to the downside. It's as simple as that. We don't beat yourself, don't come here to cry. We allow the market to decide what it wants to do, and we align our trading with what the direction the market is giving us. If you are breaking to the upside, I'll be looking for buying position all the way down here. If you take out this level, we are coming here. But if you want to start reversing and to form the head and shoulder pattern, we're looking for a selling position all the way down here. So let's give the market a couple of weeks or several weeks to decide. Although this is looking like a left shoulder, a head, a potential right shoulder might actually occur. Either should happen, a reversal to the downside will be very much evident, especially if the dollar is very strengthened. I see no reason as to why AUD/USD shouldn't go over to the downside. So far as nothing too serious happens with the US economy, I see no reason as to why AUD/USD shouldn't bleed all the way to the downside. So I'm favoring this market to the downside to the tune of 60%. I'm favoring this market to the upside to the tune of 40%. All right, that's it for AUD/USD. Let's look at BTC. BTC, as usual, it has done its trickery. All right, BTC, let's start from the daily. BTC, we saw the breach of this bearish trend line. Once we broke above this bearish trend line, we came back here, we did the retest here, and we started. Let me zoom in properly. Sorry, you guys are not seeing my charts. So we kind of broke above this resistance area. Automatically, this resistance became support. We pulled back for a retest and we took off from here, and we kind of identified this area to be the nearest support for price to bounce in, and we'll start pushing all the way to the upside. We drew our trend line, and this was the third touch of the trend line. So we had confluence. We have support area. This was support. We have trend line support, normal support. We had candlestick bounce, and we also have Fibonacci. I got my Fibonacci from swing low to swing high. You realize this came rightly into the 50% Fibonacci level. This, and we had this bullish engulfing candle bounce. Let me zoom in properly so you get to see this. We had this bullish engulfing candle bounce. This was the area we anticipated a push all the way to the upside. But at the time, I was a little bit skeptical. Why? Because this guy is here. If you think I'm lying, watch our previous episode. We called this house. I said wait for a break. Don't start buying yet. I said don't start buying yet. Why? Because this guy is here. Look, this was the first breakout, a retest. We tried bouncing from here, we failed. We came back down here again, and we had this bullish engulfing candle bounce. I wasn't really confident in going long here. I not like I knew for a fact. What I knew, I suspected this guy would be an issue, a possible issue as to why we reverse all the way to the downside. Best believe I've been doing this for over 10 years, so I've seen various market manipulation cycles happen. So when I see one, my mind just tells me, guy, this thing is not looking juicy. Like a trade can be looking freaking juicy and still end up not being juicy. We had every reason as to why we should be looking for buying position to the upside. Okay, I think that again. We have normal trend line support. We have a bounce from the trend line. Yeah, We have normal support around here. We have this bullish engulfing candle bounce. Why are we not supposed to blow all the way to the upside? Like everything was just coming in play, giving us an optimal reason as to why we should buy. But again, this evil spirit was here, and I called it out. I said, wait, don't start buying yet. Wait for price to break above this area. If you see a break above this area, you can start buying all the way down here. $93,000 per coin was our initial target. And what happened is we fell short. We started reversing all the way to the downside. We started reversing all the way to the downside. This just tells you I've been doing this for long, and the market can eat my money. Like, the market needs to be way more smarter to actually eat my money. There's no point in trying to I think I have to say this more clearly. If I see a trade that is juicy, that looks like it is ripe, I look out for every reason as to why the trade should not play out. Yeah, and that's how you should trade. I look out for every possible reason why the trade should not play. And if I should see one, and it's not looking, I'm not sure about it, I'm going to sit on my hands and allow the market to decide. And see what happened. We had this massive bounce, hit resistance here, and we had this pull back to the downside. So what's next for BTC? BTC is in a state of, I don't know if I want to go up, if I want to come down. BTC is in a very confused state. Currently, this market is neutral. I don't know if it wants to go up, if it wants to come down. But like I said earlier on, as traders, we are reactors. We react to what the market is telling us. The only time I'll be interested in going long on BTC is if price comes back here and break above this area. If I see a proper break above this area, I'll be reanalyzing the market, looking for buying position to the upside. Why? So this is looking like we're trying to form a double bottom, if not already form a double bottom. This is the first bottom. This is the head or neckline, whatever you call it. This is looking like a second bottom. It's trying to occur somewhere around there. If that should be the case, our need price to come and break above this area. If we break above this area, we just keep pushing all the way to the upside. But in this scenario, we come back here and we break below this area, the old buy setup has been violated. We should start looking for selling position to the downside. Let me see if we have any issues, any evil spirit that want to cause problem to us. Let's see if we have any descending trend line. Nope. Okay, but this guy is here. This trend line is here. Okay. So the deciding factor is if we break below here, we'll start looking for selling position to the downside. But in this scenario, we come back and start pushing all the way to the upside. We break above here, I'll be looking for buying position to the upside. So that's it for BTC. Let's look at US30. US30, as I've been watching this market very closely, anticipating maybe we want to roll over to the downside, but that has not really occurred. This was looking like we were trying to form a reversal sharp pattern known as a double top. This was looking like a first top, second top, but it looks like this market may actually break above this area and just start pushing up. I mean, it's possible. I have no bias for US30. I'll only be interested in clicking the sell button if price comes back here and I see it break below here. I'll start looking for selling position to the downside. But for now, US30, I have no bias. It's possible we can break here and just start pushing all the way to the upside. That also goes to the S&P 500. Now let's look at a more prominent trade that I'm closely watching. I'm closely watching this trade, guys. I'm looking at this trade with my eagle eye, and it's looking like this trade is juicy. It's about to fall off a cliff, and we should make money trading this. Right? This is the NZD USD. NZD USD is bearish. It is bearish. We've run into major area of resistance. We form a double top. Not only have we formed a double top around this major area of resistance, we've also bounced at this trend line. We are currently pointing down, and this is looking like a pin, if not a shooting star, telling us a reversal to the downside should occur. The weekly is telling us the same thing. This is the double top. This is the break fake out of this minor level to form the double top. We came back here, we tested this place, we are currently pointing down. So what's the rules of engagement for this guy? The rules of engagement for this guy is on the intraday time frame. I can actually see we violated the intraday trend line. This is the intraday minor trend line. It has been broken. So we've broken the intraday bullish trend, but we are having issues with this level, right? We are having issues breaking below this area. The monthly, the weekly, the daily has told us you are looking for selling position to the downside, but we need our entry time frame to actually align with what the monthly, weekly is saying to us, and we are having issues with this level right here. This is not a major level, but this guy is actually right. It's actually here. All right, so you don't want to mess with this guy. And if you watch our previous episode, I did a proper top-down analysis on NZD/USD. I don't want this trade, this episode to be very lengthy, hence we just continue where we stopped from the last episode. So from what I can see is this is looking like a double top. The first top is second top on an intraday key level, and we've broken above. You know how I love to trade. Once price take out my counter trend line, already I'm loading my position to the downside. Once price take out my counter trend, I'm looking for I'm already jumping in on the trade. So the rules of engagement, if this candle today is on Monday, doing London section, maybe towards London section breaking. I don't normally trade on Monday morning. I don't know why. I don't like Monday trade. It's not, I don't trade on Monday, so I'll be looking at this from maybe towards the evening period. Yeah, towards the evening period, after the market has done its nonsense it wants to do on the Monday morning, and towards the New York section and towards the London section, the US section, the market tends to act on Monday morning, tends to act irrational. After it has done its nonsense, I'll be jumping in for a selling position to the downside. This area becomes my overall target for NZD/USD. If this kind of close like this, immediately I'll be selling all the way down here. Why so? Because the monthly, the weekly, the daily has told me so to the downside. Right, on the monthly you can actually see we've run into a major area of resistance, which is here. We had a reversal sharp pattern known as double top. We also bounced off from a trend line. We also have Fibonacci play. We also have Fibonacci play. We also have a bounce from the 61.8 Fibonacci level. So we have confidence as to why we should be looking for selling position to the downside. We have a bounce from trend line resistance. We have Fibonacci bounce. We have sharp pattern bounce on a major area of resistance. All of these coming together to give us a strong confidence as to why we should be looking for selling position to the downside. Once we start selling all the way down here, this was the area we see how notice how we came down here, reverse, start pushing all the way to the upside. Now we're coming down again, we also reverse, push up here again to touch this trend line again. So it's possible if I start selling all the way down here, once price comes in here, I'll be locking in significant amount of my profit. This area marked with the gray bar is this level. Is this level right here. This was the area on the monthly you saw that was having issues breaking below. So once I start selling all the way down here, when price comes in here, I'll be locking in significant amount of my profit here. Why? So this area has the potentiality of reversing price all the way to the up. All right, so you don't want to be in a lot of profit only for price to come in here and bounce, because you can see it looking like the possibility of tapping here and pushing all the way to the upside is very eminent. I'm not going to lie to you guys. So if you come in here, I'll be locking in significant amount of my profit. In anticipation, we just roll over to the downside here. I'm not too sure if we can come here, but if we come here, all fine and good. My other position, which stop loss has been pushed below where I sold from, will do that for me. But in the case we come here, best believe I'll be closing out my first position, pushing my stop loss past break even. Anticipation, my second position will be coming down here. But in this scenario, that price comes back and we break above or breach this trend line, this bearish trend line, the wholesale setup has been violated. All right, so in truth, I'm favoring this market to the downside to the tune of 70%. I'm favoring this market to the upside to the tune of 30%. So the rules of engagement is, if we break above here, the wholesale setup has been violated. All right, but if we this candle close bearish like this, we can start selling all the way to the downside. So that's it for NZD USD. That limited opportunity on ADUSD. Yes, I think I've talked on ADUSD before. Oh yeah, I did. So GBP USD, there are no trade opportunity on GBP USD. But in this scenario, there are no trade opportunity on GBP USD. I'm not going to lie to you guys. But although this is looking very tempting, it's looking like it's more for his supply and demand kind of a trend. There's a supply area around here. Price can tap in here and start reversing all the way to the downside. But I won't be interested in GBUSD. Same goes to ADUSD. There are no trade opportunity on ADUSD. Although I did call a breakout, a retest here on the last episode, a reversal to the downside would have occurred. Intraday trader probably would have closed out their first position here, pushing their stop loss break even, but this guy is currently consolidating. All right, so ADUSD, the initial opportunity. I'm closely watching the market. I'm allowing the market to do what it wants to do, giving us the reason as to why we should be looking for selling position to the downside. This is looking like a left shoulder head, maybe a potential right shoulder wants to occur. This will be the neckline. Once we take out this area, I'll be selling. But in the scenario, price break above this area, I'll also be looking for buying position to the upside. But for now, ADUSD, allow the market to decide what it wants to do. Basically, all the dollar-based pair are giving us reversal sharp pattern to the downside. That is signaling that the dollar is about to strengthen. You have to understand the dollar is the global currency. Dollar is the global currency, right? So everything flows through the dollar, right? So if we see a strong dollar, we can start expecting a reversal of most of the major currency pair will be crashing all the way to the downside. Well, that's it for today's episode. Once again, my name is Bestman Dipre Kelsa Makri. I'll be catching you guys in my subsequent video. Peace and love.